Dow futures slump 545 PDs. Inflation fears weigh on sentiment. U.S. shares are visible beginning sharply lower Monday, with traders fretting beforehand of a key Federal Reserve meeting following a red-hot patron inflation file. At 7:15 a.m. Eastern Time, 11:15 GMT, the Dow futures settlement changed into down 545 points, or 1.7%. S&P 500 futures traded 90 factors, or 2.3%, decrease, and Nasdaq 100 futures dropped 330 factors, or 2.8%. The fundamental indices on Wall Street closed with hefty losses on Friday after the May Purchaser Charge Index got here in stronger than predicted, climbing at an annual charge of 8.6%, the highest reading when you consider that 1981. The blue-chip Dow Jones Industrial Average dropped 880 points, or 2.7%, the broad-based S&P 500 fell 2.9% and the tech-heavy Nasdaq Composite closed 3.5% lower. These indices published their largest weekly declines considering overdue January. The Federal Reserve is scheduled to meet this week, with policymakers predicted to raise hobby costs through a half percentage point on Wednesday in a bid to tame inflation. But Friday's CPI release has elevated fears that the Fed will need to act aggressively for a longer duration than previously envisaged, increasing the risks that the economy can be pressured right into a recession. Unexpectedly persistent demand, and the inflationary strain this is fueling, has led us to make a similarly upward revision to our outlook for Fed policy, stated analysts at ABN AMRO, in a Be Aware. Following the 50 BP anticipated hikes in June and July already well flagged to markets by way of FOMC participants, we now count on the Fed to retain elevating fees at this tempo, with the Fed price range rate now expected to rise to 3.754% by using February. Concern that the surging inflation would require extra rapid Federal Reserve coverage tightening has visible U.S. Treasury yields bounce. The benchmark 10-year yield touched 3.25% in advance Monday, and the 2-year yield rose to its highest degree due to the fact past due 2007, briefly exceeding the 10-year for the first time on the grounds that early April. Oil costs slipped Monday as a burst of new COVID-19 cases in Beijing, China's capital metropolis, thwarted hopes of a rapid increase in demand from the sector's largest crude importer. Also weighing at the rate of crude is the possibility of further U.S. economic tightening to fight surging inflation, boosting the dollar and probably inflicting a sharp monetary slowdown. Additionally, gold futures fell 0.8% to $1,860.40 per ounce, even as EUR/USD traded 0.5% decrease at 1.0462.